Cash flow is like oxygen. Even a healthy person can pass out without enough oxygen, and a perfectly healthy rental property can fail because of a lack of cash. In this video, I want to talk to you about how you can adjust your mortgage in order to improve your cash position. The number one negative driver for cash flow in a rental property is the mortgage. It can account for between 45 and 60% of a month's rent. That's how much is used to pay down the mortgage each month. If you can even push that out, adjust it somehow, you can drastically improve your cash position on a monthly basis. It's not a long-term solution, but certainly it helps get through the next 12 weeks. So first, you can talk to the bank, give them a call, and see once if they're willing to adjust your loan schedule. Sometimes they'll actually allow you to skip 2 payments and add them to the end of the loan. Another way you can do it is consider refinancing, right? Interest rates are pretty good right now. You can do refinancing different ways. So depending on how you've got your property set up, maybe you're on a short amortization schedule, like a 15-year or a 20-year. Look to see if you can get a 30-year. If you can get a 30-year, then you're going to decrease your monthly payment. That's helpful. Also, you might consider a cash out refinance. Take the cash. Now you've got a cash reserve. You can always put the cash back in once this thing blows over, but it gives you that cushion that you're going to need to get through the next 12 weeks. Consider also looking at your other loans. Look at things like if you have a business, an SBA loan. One of our partners told us that the servicer for the SBA has the authority to grant deferment. So you don't even have to go to the SBA. You can just go right to your loan servicer, and they're able to grant you a 90-day forbearance. So just push your payments back 90 days, and then we'll pick it up in 90 days. Look at your credit cards. I did this on our credit cards. Just call them up, and they were like, yep, we're just automatically giving everybody an extra 30 days, and we'll reevaluate then. It's not saying that we need it, but if we do, it's nice to know that it's there. Other personal loans that you might want to think about, if you have a car loan or a vehicle lease, same thing, give them a call. Same thing on your home loan. Sometimes you're not thinking about that home loan, that's your personal home, but it's the same thing. That's a payment that's coming due. And if you could forbear that for 2 months or 3 months, suddenly that gives you extra cash flow that can be helpful in your rental property. And finally, many of you have heard of a HELOC, a home equity line of credit. If you don't have one on your personal home, it wouldn't hurt to inquire into getting that. Even if you don't use it, at least you've got it set up. Generally, the interest is about 2% over the interest rate on the term portion of the loan. So it's fairly reasonable, but it can help you get through a tight crunch, say if the tenant absolutely cannot pay rent. But what if your tenant is paying the rent? Do you need to be adjusting your mortgage and going through some of these things? Totally up to you. And how long is the tenant going to be able to pay rent? We don't know how deep the job cuts are going to go. We don't know where the bottom to this is yet. And so as a rental property owner, I would like to have some additional cash reserves. And so if I can put some things in place now to preserve that cash so that when the worst case scenario happens, I have some sort of reserve built up. Under normal circumstances, half of the monthly rent is being used to pay the mortgage. If you didn't have to pay the mortgage for a month, then you could afford to accept half of a rent payment from a tenant.